All right. Hello, everyone, and welcome to another edition of This Week in Crypto. If this is your first time here, this is a weekly panel call where the Sentiment team and community members kind of get around and discuss the recent crypto market events. But we do it from a more fundamental perspective and a behavioral perspective. We just take a look at the most interesting market insights that we've discovered over the week using our own metrics and indicators. So if you haven't used Sentiment before, I strongly suggest checking it out. The link will be in the description. We'll tell you a bit more about our platform this time around. And without any further ado, I'm gonna kick it off by giving the floor to Brian. Brian, if you wanna start us out today, and we'll go from there.
You bet. Thanks, Dino. Welcome, everyone, and hope everyone's been safe these past few weeks here. We hope you and your family are all holding up okay, and we all get through these tumultuous times together. I'm going to be kicking things off here with a bit of a brief walkthrough about our platform. We've received some comments requesting this during one of our streams, and we thought it would be a good idea to do just a brief overview before we delve into everything market related this week. So that being said, Santiment is a market intelligence platform for cryptocurrencies, as most of you know. We provide tools, indicators, signals, and strategies that help people better understand the crypto market, predict the prices of digital assets, and monitor the behavior of different market stakeholders. We build all of these tools based on three sources of information. What we're seeing now is our on-chain data, as illustrated here by one of our highly touted metrics, mean dollar invested age, where we currently collect on-chain data for Bitcoin, Ethereum, all ERC20 tokens, Ripple, EOS, Binance Chain, Litecoin, and Bitcoin Cash, with more blockchains added in the future. Secondly, we have here our social media data. Here we track over 1,000 crypto social media channels, including Telegram, groups, crypto subreddits, Discord channels, and more, which allows us to calculate things like the amount of social mentions of a particular coin or project, or the amount of positive and negative sentiment within the crypto community. Here we have development activity data. Here we parse and filter the GitHub activity of all cryptocurrency projects in our database so we can track which teams continue to work on their products, push code and develop new features, which is often a strong proxy for a project's success. You'll also notice that we have this shared access button enabled here, which I wanted to illustrate on dev activity because we have a widely different array of development activity in between projects. Sometimes it's key to actually separate projects based on their varying development activity, or you can measure it more by percent change, which sometimes you'll see a bit of noise if you do that, but it does give an accurate reflection of how specific projects respectively are developing versus their own previous history, as opposed to an overall context like this one. Our platform is divided into two parts. Sandbase is our main site, and it's designed for anyone that wants to learn more about crypto fundamentals and dip their toes into behavioral analysis. Sandbase has a ton of features, which we don't have time to delve into here, but some main features include on-chain social and development indicators for more than 700 projects, as well as the ability to compare these between different coins on the same charts. You can also create your own watch lists for the coins that you care about and track their price, on-chain, and other information in a dynamic list. The ability to set alerts for a variety of market events, everything from a change in price to shifts in on-chain activity, spikes in social mentions of a project, or even when a certain address, for example, a known whale, dumps their bags in a hurry. And as many of you know, we also have community insights, daily research pieces written by the Santiment team and community members, which demonstrate how to use this data of ours to understand and eventually beat the market. These sometimes include market calls or updates on the behavior of different market agents like whales, miners, traders, etc., or even new strategies and alpha that we've developed using our data. Our latest addition to the platform is our Sandbase feed, which is a continuous stream of updates on crypto assets, your watch lists, and general market conditions using different sentiment metrics, data, and tools. All of this and a lot more is available on Sandbase. Some of it can be accessed for free, but all of it is unlockable with a Sandbase Pro subscription, which is currently just $49 a month and will grant you access to all of the above, plus our plugin for importing sentiment data directly into a spreadsheet onto Google Sheets, which we'll demonstrate more during our call here today. And there's a dozen more pre-made templates that we've created with this plugin, some of which you've seen on this stream already. So if you want to learn to analyze the crypto market like we're doing here, go now to app.santiment.net, create a free account, and get a 2-week free trial to everything on Sandbase, and I guarantee you'll want to stay for more. Our second site, SandData, is built for advanced traders, crypto funds, market researchers, and anyone that isn't afraid of getting their hands dirty to analyze every possible aspect of the crypto markets. With SandData, you'll get full access to not just Sandbase, but over 100 additional metrics that we've developed over the last 3 years, ranging from basic to very, very advanced as I scroll down here. With SandData, you can track the on-chain behavior of whales and analyze the top transactions for each coin, retail holders, speculators when they're moving coins to and from exchanges, general network participants and how they interact with the blockchains, track miners and what they're doing with their block rewards, and also get access to some advanced social metrics like positive and negative sentiment for every coin in our database, and a real-time feed of messages that we collected on any coin or topic on crypto social media. Many of these indicators we've developed in-house and are therefore not available anywhere else. And you can get access to all of them and Sandbase for $290 per month. For more, check out santiment.net/sanddata. The link will also be in the description of this video, and you can get a 2-week trial for all of our tools and see for yourself why people use SandData to gain the edge in today's crypto market. And before we move on to some market commentary to go over what we've seen over the past week, I wanted to open the floor and ask if anyone else would like to add anything further on top of what's already been mentioned here.
No, I think that was a pretty good overview of the platform. As Brian said, guys, feel free to, the link to sentiment.net will be in the description of this video. So check it out, get a 2-week trial for pretty much everything Brian just mentioned and everything you're going to see today during the call. So I suggest we just kind of jump into the market and what's been going on over the last week, because I think there's quite a bit of interesting developments on our charts. Brian, if you want to start us off.
You bet. Yeah, and just so everyone knows, if you want to ask us more questions based on what you just saw, feel free to send us a DM on Twitter. Make a comment on the stream right now on YouTube. We have people monitoring it who will be happy to help out. You can also go to our Sandbase page here, click on this intercom button, and you can have a direct conversation with any of our agents that are currently watching for conversations. All that being said, I'm going to kick us off here with a quick overview of some recent additions to our Sandbase. So before this past week, we only had crypto assets. We're obviously a cryptocurrency site, so that makes sense. But considering the market conditions and all that's been happening in the world over the past month to 2 months, we wanted to include some more context related to things like the S&P 500 price, to give 2 examples of things that are loose to tight correlations depending on the timing to cryptocurrency. And through this type of analysis, we can actually see exactly how tightly correlated cryptocurrency is to these other 2 asset classes at any given time. I think it's amazing. It really gives a lot of context and a nice little boost to an objective way where we can look at all markets in one axis here like we're doing right now. And right now we're looking at 1 year of previous data for Bitcoin in green, the S&P in dark brown here, the price of gold in pink, and then the price of Ethereum here in red. Over the course of the year, we see plenty of variation. We see obviously Bitcoin and Ethereum on a fairly close track here, with Bitcoin doing a bit of separation here on the decline of basically July through the end of the year, which often happens with altcoins falling below Bitcoin, and then Ethereum sort of making up ground around the turn of the year, actually surpassing Bitcoin, and then dropping again down below when we had Black Thursday and the giant market crash related to COVID-19. In the meantime, we see that the S&P did sort of a gradual crawl like it often does in its bull markets, much less variance and volatility, which you have likely come to expect dealing with these different markets if you're familiar with both. And then, of course, we have gold, which has a bit more volatility and has actually been tracking fairly close to what the S&P has been doing, which is not that typical because they only have a beta of about 0.3 to 0.4. And interestingly, you can see here when the S&P dropped, cryptocurrency dropped right along with it. And this is when we started to see some very heavy correlation here. All of this, of course, was related to COVID-19 fear, on top of what many argue to have been a correction to the extended bull market that was going on in the S&P 500 for a very long period of time, multiple years. So all that combined together, we had a very large drop here when Black Thursday happened for cryptocurrency. And cryptocurrency has started to recover, as most of you know, along with the S&P, showing that we're still in a bit of a correlative state. For those of you who think that cryptocurrency is rising now, but the S&P isn't, that's not true. What we're seeing here is that both have had a bit of a bounce over the past few weeks since the large correction. In the meantime, we've seen that gold, even gold had a sort of a mild drop, but has almost fully recovered back to its year-long high, which is very interesting. So many people argue that gold is the ultimate safe haven in investing right now when markets aren't going well. So far, that's proven to be kind of true, but eventually many crypto enthusiasts believe that that can be the case for crypto as well, especially if there's some government fragility going on in many countries that might be struggling with their own currencies. So I encourage you guys to check this out. It's a really cool way to look at how markets and different asset classes are comparing to each other. You don't just have to look at Bitcoin or Ethereum. You could look at how any other altcoin might be doing. And you can change up the time range here. You can look at just the previous month, even just the previous 24 hours. A lot of cool features here. Any comments from anyone else on the team about what's going on in different asset classes compared to each other right now?
I think in general, I don't know, Jan is on the call, right? Maybe Jan, if you have your notebook open, you can tell us how the correlation between the S&P 500 and Bitcoin has kind of developed over the last...
I checked it.
Yeah,
it's,
you did?
Decreasing. Yeah,
it's still decreasing, right? Yeah, the last time I checked, it was kind of going down to like pre-crash levels. I don't know if it's that low. Like the spike, the highest it's been was 0.64 as far as I remember.
Right.
And then last week when I checked it, it was going down to about 0.55 or something like that. But I don't know where it is at the moment. Does anybody have that info? It would be interesting to just see how much it's fallen since March 13th and the drop.
I saw 0.55 too.
Yeah.
Go ahead, Max.
Oh, I just want to say that even without exact number, looking at the market actions like Bitcoin, Ethereum, and or others too, have been trying to break out, and they move last 2 days quite nicely up, and there is a trend lines established. Where if you look at the price structure in S&P, they had the stop, and they're even trying also 3 days ago trying to catch up their breath. So the only asset which is from classic finance is recovering strongly is oil. Yeah, and actually this is one indication that coronavirus might be market believes it's over. We start pricing in higher oil prices, travels, all these things are recovering. But the traditional stock market is struggling quite substantially, yeah, regardless of all the money pumped into the economy. Yeah.
Yeah.
And so Bitcoin is moving nicely, the last 2 days, and tries go up. Oil is going nicely. The rest is, yeah. But the exact number, yeah, I think it's 0.55.
Okay.
And, the way we calculate it, it's a 30-day rolling correlation.
Yes.
And it's more like midterm signal if we want to take it as a signal, and we need to wait at least 1 week. Yeah.
So I think oil is actually going up because, apart from the coronavirus, there has been this ongoing oil war between Saudi Arabia and Russia. And now the US stepped in, and yesterday Trump tweeted that he convinced Saudi Arabia and Russia to slash their output of oil, which should help increase the demand. So I think this is what this huge pump in oil prices is based on, at least from the news that I read.
Yeah, Alex Kruger, one of our advisors, actually remarked yesterday on Twitter that announcement for oil coincided right when Bitcoin started to make its rise from about 6,400 to where it is now, about 24 hours later, at about 6,900. So that's interesting to me as well. There might be some people that are both in crypto and oil that decided to take a bigger investment in crypto when that oil announcement came out.
So you're playing with this word in crypto is digital oil. Yeah, okay. Digital commodity.
Yeah.
I can imagine that commodity traders will be also trading cryptocurrencies. I mean, it's a purely kind of speculative asset. I mean, oil does not give you dividends. I can't see how someone is going to be purchasing oil futures for his retirement plan. So yeah, in that sense, it's kind of interesting actually. Yeah, I mean, oil and Bitcoin to be correlated, like that could be very curious observation.
Yeah, apparently it was like almost on the minute. So, clearly we these markets in crypto are still very much dependent on what whale traders are doing. And if a whale trader happens to be interested in both oil and crypto, and here's that kind of an announcement, there's a very solid chance that they may be making a purchase in both asset classes at any given time.
Maybe we need to add oil prices here too.
Yes. Let's
I think,
yeah.
I think we should. Yeah.
So one nice thing about adding these traditional markets is that it makes it very easy using our Python library to compute things like correlations and stuff, because now you can very easily fetch these prices without any need of anything else. So yeah, that's also a benefit.
Brian, can you zoom out to the 1 month period real quick?
Sure.
Right. So the S&P 500, I thought I saw a dip recently, maybe yesterday. Yeah, there was a small dip, right? So
Right here, yeah.
Yeah, there, and then another one after it kind of spiked a little bit. I think that also might be in relation to this report that the amount of people filing for unemployment in the U.S. has doubled. I think in the last week, or it's been I think 6.6 million people or something.
Yeah, which is like almost a record, I believe.
Yep.
And over the last 70 years, it's absolutely crazy. Some speculate that might be because there's some unemployment news that's come out where they're giving us a $1,200 stimulus, even for working people. Anyone under $75,000 per year income gets this stimulus, and then on top of that, there are some bonuses that I won't delve into related to people who are fully unemployed right now. So a lot of people are announcing that they're unemployed. at record rates as a result.
Right. So it will be very interesting, I think, in the next couple of weeks to see, whether the S&P can really recover from the current conditions. But even more interestingly, to me at least, is whether Bitcoin is finally kind of going to be able to decouple from the world financial markets, because since the crash, it's still been like 0.55 is still a pretty high correlation between Bitcoin and stocks, Wall Street and crypto. So it's going to be interesting to see after this initial shock. We predicted in the analysis that we wrote right after the crash, we predicted that crypto is going to be faster to rebound from the collapse. So yeah, we'll be keeping an eye on the correlation and whether that kind of, because in the past what we've noticed is that this sort of declining correlation between the price of Bitcoin and the S&P 500 index has very often kind of preceded the bounce back for crypto markets. So given the fact that we're still kind of seeing this decline, if we continue to see it in the next couple of weeks, it might be a fairly bullish signal for the recovery of the crypto market in particular.
Yeah, and as Maxim reported a few weeks ago on this call and in an article, he said that exact thing, basically, that when there is no correlation or any peg dependent on other markets, that seems to be when crypto thrives best overall. And the resting state for crypto and the S&P is right around zero, meaning it's pretty much not correlated in any way, inverse wise or parallel wise. So once we get back to that number, I agree. I think that's when we start to take off.
And I think, like from my perspective, the stock market is. It seems to me that it's going to get a lot of trouble around now. New fundamental data is coming out, like how hard actually the business is going to be hit by this coronavirus. And I'm not 100% sure that this is all priced in. For example, today some new reports about paychecks came out, and I think they were widely worse than what were predicted initially. And also there are some very wild predictions about how the global economy is going to shrink. And I've seen, different predictions that are widely different. While for Bitcoin, I mean, we have one major thing for Bitcoin. This is the halving, and that's pretty much it, I think. I mean, we just need to figure this one out, how it's going to impact the market.
Mm-hmm. Yeah, just based on the sheer amount of time that warehouses and factories have been closed, that's basically lost revenue for a lot of companies out there, and not something that you can easily just immediately get back. It's the markets in traditional traditional sense for the S&P and other world industry markets out there, they're based on not just revenues coming in for companies, but also speculation as to how they'll perform in the future. And many people think that this dip in the traditional markets just happened because of speculation, because of coronavirus. But what they're not realizing, as Valentin is alluding to, is the fact that they actually have lost a lot of revenue from being closed for 1, 2, 3, or even more months, depending on how long this goes. So that's, what cryptocurrency doesn't have to rely on is any sort of real revenue coming into a hypothetical company. It's based on speculation and based on how much the collective community believes that prices can move up. And that's kind of an advantage in situations like these.
Yep. And speaking of, go ahead, Val.
Like my personal opinion is that Bitcoin, if nothing else, it's very kind of similar to gold in that sense. It's just some scarce resource that people are betting for, and that's it. And we know that it's not going to increase in supply or anything. And with all this printing of money, I mean, to be honest, like to be fully fair, I don't think that printing money is something bad on generally. And to be honest, like in this particular situation, actually, it might make a lot of sense to print really a huge amount of money in order to get the economy out of it. but it's going to cause some side effects like inflation and resources like Bitcoin, like assets like Bitcoin. They are not so like they're not impacted by inflation because their supply is fixed. So in that sense, I think it's a very similar asset class to gold, but it's much easier to transport and store and to trade and everything.
So speaking of the sort of ways to figure out, the health of a Bitcoin or any sort of network, I think that's a good segue to check out what's been going on the on-chain side of things with Bitcoin and Ethereum specifically. I think we have some updates on our price DA divergence model, Brian, and kind of the fact that it's been lighting up recently as the price of Bitcoin started to recover a bit. I think there's been quite a few bullish signals over the last few days, indicating that the recovery might be quicker than we thought.
Yeah, good segue for this. So another thing we wanted to go over is the daily active address versus price divergence model that we have available on Sandsheets. Anyone can use this. This essentially measures the amount of daily active addresses that are coming in Bitcoin and Ethereum, which I'll show you in a second, compared to their respective prices. So when there are a surplus, essentially, of daily active addresses coming in compared to the price levels that Bitcoin has historically had for daily active addresses at any given price, we will see green markers like we saw back here in late 2018 when we had our bottom, and then what we're seeing now here, which happened after Black Thursday essentially, and still are seeing sporadically throughout the last couple weeks. On the other side, we see red signals here come in when there are a lack of daily active addresses compared to prices. And we saw plenty of them in the summer of 2019, about 9 months ago, when we had our top. I think we got to close to, it actually went a little higher than this at some point, but it was close to 14,000 at one point. And then it sort of dropped off, and it started to recover right around the beginning of the year. And we were basically silent around here for this long stretch between August and February. And then right when Black Thursday hit, we started to get plenty of buy signals. And these, in order to see these signals, it has to cross a threshold. We did a back test and came up with a threshold of 0.2925 after plenty of experiments and different thresholds being tried out to see what the best correlation is with these thresholds and price actually moving up, and these thresholds and prices moving down. So right now we're seeing plenty of daily active addresses, especially right after Black Thursday when prices got down to about 3,700. Daily active addresses basically didn't have a drop off, and because of that, we had a lot of signals firing off, showing that we still are getting plenty of network health in this respect. And we're still seeing plenty of those signals that now, even with the rise close to 7,000. So this is very interesting. And even more interesting is the fact that Ethereum's daily active addresses chart, just give it a moment to load. Let's refresh that. Ethereum's network daily active address thresholds, as it tries to reload again, they have been firing every single day since Black Thursday came out, showing that we have a serious divergence between what's going on here with daily active addresses continuing to make transactions and prices where they're at. This is showing that there was a clear oversold signal happening right when Black Thursday happened, and literally every single day since, we're seeing these thresholds been going off, and we don't see that many on Ethereum. We did a back test, and there are a lot less signals that show overall because there's a little less correlation. So we had to go with a very high threshold of about 0.5 just to get a nice correlation between when these buy signals go off and when these sell signals go off, since there's a lot more noise that detracts from that. That being said, despite the high requirement for these signals to fire, we're getting them every single day in Ethereum, showing that the network health is in a much better place than what the price is representing right now. So this model has shown to have a pretty good track record for where prices tend to end up based on when things are overbought or oversold. And right now we're seeing that we're oversold still, even after the rise up to about 144 where we are now. Anyone else have comments on this?
Yeah, no,
Questions?
I'm curious. So these vertical spikes, there's sort of a difference in their length, right? Does that indicate something?
So the minimum threshold is 0.5. You'll notice that there aren't any that are firing under that level. So these signals up above 1, these are basically showing that that's the strongest divergences we've had. The higher the signal, the stronger divergence there is between daily active addresses and their price. So as the price has come up, you'll notice that it's declined just slightly, but not enough to be below that 0.5 threshold, which is why we're still seeing them over the past few days. But when about a week after Black Thursday, let's see if I can zoom in here just a little. That's when we had some of the highest signals because there were a lot of transactions going on and Ethereum. And when that happens, you'll just get a higher and higher divergence signal until the price starts to adjust to all the daily active addresses that are being transacted. Does that make sense?
Yeah. And I think what might be going on here, just given this sort of declining slope in terms of the triggers, the signals triggered, is the fact that Ethereum, the price of Ethereum and Bitcoin has kind of slowly been recovering, at least a little bit compared to the crash, but the amount of on-chain activity, it's pretty much stayed the same, even spiked a little bit at some points in time. So this is, I think, what we're seeing kind of visualized on this graph is that the amount of actual transfers on the network and the addresses that are actively either sending or receiving Ethereum or Bitcoin, it has not dropped that significantly over the last couple of weeks. The only thing that's dropped is the price, and that's the reason why this particular template is kind of firing all of these bullish signals, is because it's kind of weighing the relationship between the price and on-chain activity. And on-chain activity, there's been some volatility on there, but in general, we can show a few charts afterwards. In general, the amount of actual activity on the network has stayed fairly normal throughout the last couple of weeks, I think.
Yeah, that's exactly right. And as Dino said, it really represents the overreaction to the price drop, basically, because daily active addresses stayed stable and prices just fell off of a cliff, showing that there was a stronger and stronger divergence until price had to recover just to adjust to all of these all of these daily active addresses that continued to fire off here. And I do have to retract my statement saying that it has fired every single day, because we can see here there is a very small gap after I zoomed in on April 1st and April 2nd, where the threshold actually did fall below 0.5. And we can illustrate Ethereum here. If I can type correctly. So Ethereum daily active addresses, I'm going to zoom into just the last 30 days. And we can see that there was a mild drop off right around the end of the month, but it's still stable. And I'll zoom out just a little more so you can see that it's not dropping off significantly at all from where it has even before Black Thursday. We're actually in a very healthy state where we're actually still getting more daily active addresses now than we were getting toward the end of 2019, and even on the big rise in January to about mid-February, there were less daily active addresses going on there than there are now. So that's a very promising sign. I'm actually a little surprised that the last couple days don't have that threshold crossed, because prices are still so low, and daily active addresses are still in a good spot here.
Yeah, I mean this spike at what is it, like March 20th or something, that we're seeing, that could also, yeah, 21st. Obviously part of that could just be some people kind of taking advantage of the first signs of life and recovery, and maybe moving their coins, to exchanges to sell, to kind of get away from the market before things start crashing down again. And we can see that, ever since that, or immediately after that spike, we've had another slight correction in the price of Ethereum. But I think in the past few days specifically, we've kind of, it seems, at least to me, that we've kind of passed that threshold of panic selling, at least based on-chain data. Like if you look at go to Bitcoin real quick, I talked to Tsanko, one of our developers, recently about the maximal mean age and sort of the differences in the slope of that metric in the last couple of weeks. So can you look at the maximal mean age chart for Bitcoin? Yep. And only select the mean dollar age for it. Yeah, and so if we plot it against the price, yeah. So I think, maybe try to take 1 year. Let's see if that maybe does it a bit better. Right. Okay. So I think this shows it slightly better. So I was looking at the maximal mean age for Bitcoin since the collapse, and it kind of seemed curious to me that the slope keeps increasing, right? But there's a difference sort of in the angle of the slope between, let's say, March 12th and March 20th, and then from March 20th onward. You can see that it's kind of more humpy there, right? And then it kind of goes back into its sort of normal slope if you look at the historical values. So I think what Sanko mentioned that this might indicate is that since the market crash, in the first few days slash weeks, everybody pretty much froze almost, and was trying to wait it out, figure out what's going to happen next, which kind of contributed to this very sort of bumpy slope in the maximal mean age. But since then, over the last maybe 10 days, it started to normalize in its incline, indicating sort of the market going back to its normal activity in terms of the amount of coins being transacted on the network, and the average age of every coin being moved. I don't know, Val, do you see the difference between the slopes, and do you think that might indicate something?
Yeah, so it seems that indeed the slope is bigger. So that means that kind of the mean age is increasing on kind of a faster slope.
Yeah.
I think something that we need to improve on this chart is maybe to have this metric not as an absolute value, but how it changes each day, so that we can see whether it's decreasing or increasing over time. And if it's increasing, how fast it is increasing. Maybe that's going to make it more visible.
Yeah.
But it's kind of like this decrease that happened just before the crash. I think it was new money flowing in, and that's kind of sad, because I guess people didn't see that the price is going to crash, which is normal. So they've been purchasing Bitcoin at levels of I don't know, where was that? That was around $7,000, I think, at the bottom, when this decrease was at the bottom, and then the crash happened. Now we don't see really. I would expect that if there is a huge amount of money coming in, this metric should be decreasing, I think. but it's not. So, but it's kind of flattening right now. You see how it's like in the last couple of days it started to flatten, which I
Yep.
think could be an indication of new money coming in. I mean, so far people has been maybe a bit scared, like, oh my God, what's going on? But yeah, like this flattening could be kind of indication that people are starting to convince themselves that, wow, this thing seems to be bottomed out. So let's get into the party before it's over.
Yeah, definitely looks like it. Obviously, maximum mean age. I think it's not necessarily the greatest short-term indicator. It definitely shines the most when you're looking at like historical and long-term trends. But even in this sort of micro view, we can see the differences between what's been going on since the market crash, what happened since the first sort of interim top, and then over the last few days, that the fact that the slope has been kind of plateauing, meaning that that there seems to be increased activity of coins on the blockchain. So yeah, just another thing to kind of keep in mind as we go over these templates. Brian, did you have any other sort of templates that you wanted to go over?
No, that's that'll do it for me. But I know that Maxim wanted to discuss some stuff, and I'm happy to share my screen for him if he wants to jump in here.
Yeah, as a follow-up to seems like working price divergency. The question is now, can we continue grow? So if you open Sentiment, appsentiment.net, I think it's a good time now to start applying our holistic volume approach. How do you like the name, Dino? Holistic volume approach. Wow.
Holistic volume approach?
Yeah.
I like it.
So yeah, sounds good. So Bitcoin,
HVA.
yeah. Then for Bitcoin, select volume, yeah. Then select transaction volume. Social volume. It's now it's all the way down. Our developers is just changing things every week. Yeah, and then put it on different charts, not on one.
Got it.
Yeah. Okay, good. Takes 3 months because it's like where you look at the current trend. Okay, good. So it's a kind of I didn't do analysis, so we will do it now online together. Now we see, so the last top, which was, I don't know how much, around 6.7. It was in good volume. So the next one, it kind of was decreasing. So we had this correction. It was good. So it worked again. Now, okay, so we need to get in the next 2 days good volumes. If we don't get it, it will crash down. Or let's check on others. Let's check others because I think, yeah, kind of transaction volumes show similar picture. The biggest, of course, was at the bottom, and we found distribution between the weak and strong hands. Then, yeah, every new top was coming on low one. Same picture, go down on social volume. Okay, here's better. So 2 days. The next 2 days will decide. Will define the fame or no, the destiny of Bitcoin. It looks not bad. Still, it's not severely divergence, and I would still bet that we'll get to 8,000 Bitcoin. But if we don't get this move up in the next 2 days, or bet on good volumes, yeah, the next direction will be down. If you select Ethereum, let's collect also Ethereum. Beep. So this one we keep. In Ethereum is actually, it's good to have. Well, we can keep transaction volume, but we can also take daily active addresses. It's a very nice proxy for Ethereum. Okay, so let's see. Oh, this does not look very good. Okay, but the daily active addresses for the current day it's not finished yet, yeah? So it's still calculating. Okay.
Yeah.
It's certified. Okay. Yeah, well, then it's a kind of okay. I don't see big divergences. The last week we are kind of growing, and the volume. Can you go up to see transaction volume and trading? Yeah. Oh, trading volume is good. Yeah, trading volume is good. keep growing as we are increasing, and down a little bit for transaction. Yeah. Kind of okay, not super critical, but 2 days we need to get it. Market will not hold if we don't get a follow-up in the next 2 days. It will go south. Too many cautious players, yeah. Now they kind of squeezed who are in the short positions, but if we don't get new volumes, yeah, we'll go down. Weekend will be decisive for the battle in crypto. Okay, good.
Well, we also need to keep in mind that I guess there is plenty of players that are traders that are in the red right now. So yeah, that's kind of a data point that might be important. I mean, if people are in the red, they might be more hesitant to sell.
Valentin, would you like to touch on MVRV too, while you're talking about people in the red?
Yeah, sure. MVRV seems to be improving since last week. So last week it's been lower. Now I think we're sitting at around maybe minus 15% or something like that for the half year or 1 year MVRV. Still, in negative range. Maybe we can look at, half year is okay. So it's still looking relatively good for this is so keep in mind this is a long-term indicator. It tells us on average for all the coins that in this particular case that were active in the last 180 days, whether these coins when they were acquired compared to the current price, whether they're profitable or at loss right now, and this is averaged across the whole network. And right now, I think we're sitting at around minus 15%, which is relatively good time to enter the market. So we are not overvalued at the moment. When the Black Thursday happened, we reached very low levels that are like minus 35%, which is, or minus 40 even, which are usually the best time to buy. Like minus 40% is great, especially for Bitcoin. Now we're at minus 15, which is still relatively good. I think last week, which was, I don't know, March 27th or something like that, we were again around these levels, and we said that it looks good, which our prediction kind of fulfilled back then, that the market is not going to crash too much from that point. Now it's always possible that you might see some crash to like again minus 40, but I would say that it's much less probable than than before. And after we cross the zero, this is also kind of interesting moment. And when we go into positive territory, you can see historically right now, if we reach to levels like 60 or 70%, that I think happened middle of 2019, and even like these kind of levels, that was the latest big jump. So 13,000 for Bitcoin, we reached like 60, 70, even 80, almost 90% MVRV. This usually shows that we are in a very risky territory, and we first, like, not very good idea to buy, and it might be actually a very good idea to sell. So right now we are in negative territory, so it's much more like right now the risk is where it's much better to buy at this point. And seems to be that we are not overvalued or anything like this. So this is from the MVRV perspective. And actually, while we are, I think Ethereum is pretty much the same. So if we switch to Ethereum, the same story. This indicator is also very good to measure kind of bubbles.
Sorry, just quickly, Brian, if you can mute your mic, because there seems to be some noise every once in a while, so we can hear Val a bit more clearly.
Of course.
So this indicator can help you out also with analyzing altcoins also. I mean, if you see a huge pump into the price of some altcoin, you can look at this indicator to figure out where we are in the market cycle. And if you see values that are over like 50, 60%, that means that, you know, if you decide to buy at this point, you're buying into a market where most of the participants are sitting on a very nice profit, so you are exposing yourself to the risk of these participants selling. So right now we are sitting again for Ethereum at around minus 15%. So again, the participants on average are in the red. Actually, it's minus 12. Yeah. So yeah, I mean, that's usually a good time to buy, but you should be prepared, maybe like in a case of a downturn, maybe to wait a little bit more until you're able to sell in a profit. But yeah, we are very far from these high levels of MVRV, like 50, 60, 70%, which are usually the best times to sell. So this is how it looks from the MVRV perspective. And this is not like completely related to this, but can I present my screen for a bit? I want to show you a chart that we haven't actually looked at here on this call, which is around miners and what is the behavior of the miners at the moment. So this is the balance, the Ethereum balance of the miners, of the Ethereum miners. And you can see that usually when the price of Ethereum is at the tops, we can see that the miners are liquidating their Ethereum. As for example, here, like the red one is the miner balance. You can see how around this time when Ethereum was at $350, that was like the bottom of the miner balances. That was middle of 2019. Then the miners started to accumulate as the price was dropping down. We see some small dips here and there where we see miners liquidating some of their assets. And then we saw that as the price started to push towards $200, miners started to again liquidate their Ethereum. Then Black Thursday happened. And since Black Thursday, miners has been accumulating. So that means that any sell pressure that we might be seeing from miners might be not so strong at the moment. Although we might see that like in the last couple of hours, we've seen this trend a little bit flattening, but it's still early to say that we have a trend where miners will be eliminating huge portions of their Ethereum. So this kind of sell pressure might be not so strong at the moment, which could help the price to go up. So that's from me, yeah, unless you have some questions.
Thanks, Val. Yeah, I think Max also agrees with you when it comes to these sort of like minor behavior and what it might mean. Like in general, I think the fact that we have seen a very similar behavior with miners last time around in 2019 around the top as well, kind of it appears to me like they might even have their own like basically stop losses or some sort of even algorithmic trading where they know their levels, and when they hit a certain level, they just sell off their holdings, which might make sense given that they need to figure out whether it's still profitable to mine or not, right?
Yeah. And they probably, well, it's a whole industry, right? So they need to make sure that they have enough fiat in order to operate their business.
Yeah.
So they should decide in certain times that now it's maybe time to sell some of our holdings so that we have enough money to operate for the next cycle. And this is also connected with the approaching halvening in Bitcoin, where some analysis mentioned that as the price dropped a lot of miners are probably out of business.
Yeah.
And then as the halving is approaching, maybe we're gonna see even more miners being like selling their equipment and closing their business, because if you're not profitable enough, if you don't have good enough margin, you're just going to go out of business, and it's much better to do this earlier than later, right? So as the halving approaches, the profit from mining is going to be halved, and only the best players are going to remain. And as there are less miners on the market, that means that there will be less sell pressure, because some of the sell pressure on the cryptocurrency will be definitely coming from miners that need to sell crypto in order to continue operating their
business. For sure. There was a great report by Chainalysis recently, actually, which took a look at what are the biggest sort of stakeholders other than like in exchanges, right? What are the biggest where does the biggest inflow of Bitcoin to exchanges come from? And miners was the number one group, number one cohort. So the biggest sort of sell pressure, if we're trying to chunk them into specific sort of categories, came from Bitcoin miners. So definitely a very like relevant market agent when it comes to figuring out what they're going to do and what their behavior might be. Yep.
I'm not sure like how, like I'm not part of the miners, but if we do a little bit of a thought experiment here, if I'm running a mining operation and now I know that at this point it's going to become unprofitable in order to operate my business, I'm just going to figure out, okay, like this is the time until I can basically continue to mine. After that, I pretty much need to, I don't know, sell or like throw out my equipment, because like who is going to buy a mining rig that is not making any money? It's just like useless pile of metal.
Yeah.
So I'm just going to maybe mine as long as I can, accumulate as much crypto as I can, and then wait for the price to jump up so that I can exit at the right time. So so even after the halving, probably we, like many of these players, are going to have a that they'll be willing to exit at the proper time. And as the price increases, I'm pretty sure that they're going to sell their crypto. But at some point, this kind of sell pressure should be gone. To see how that develops.
Yep. Okay. I think, guys, that will have to do it for today. We're at an hour point mark. So, real quick, I want to thank everyone that contributed to the discussion today. To everyone listening, if you guys are, you like what you see here, you like what you heard as well, check out santiment.net. The link is going to be in the description of this video. Everything that we discussed today, all of the templates, the dashboards, indicators, everything is available as part of the Santiment platform, and you can get a 2-week trial to pretty much every metric that we've showed today, and many of them that we haven't. Also, check out our Discord. We basically talk about this stuff every day on our trading channels. So if you want to kind of, be up to date on what our charts are showing on a daily basis rather than waiting on these weekly calls, that's the best place to be. So until next week, I would like to thank everyone here for joining us. If you guys, anybody listening, has some specific ideas on what they would like to hear us cover, or have some interesting insights that they would like to share with the group in one of the upcoming calls, let us know on Discord, and we'll find you a spot on one of these weekly calls in the future. So thank you everyone for joining me today, and I'll see you and talk to you all in 1 week, and stay safe everyone.
Yeah, thank you. Bye.
Thanks, guys.